One man's junk is another man's treasure. At least that's the case with WhiteHorse Finance. This company is hoping to raise $101 million in their public offering. Francis, when we take a look at this, they pay a very high dividend, but people aren't so wild about dividends these days with the fiscal cliff coming.
Yes, there's a lot of uncertainty. There's another company that went public on November 6th or 8th. It's called Stellus Capital, and it was brought by some of the same underwriters. And the profiles are very similar. But what they do in cases like this is they put in a distribution for the first quarter, and that doesn't mean that they can pay it, but they put it in to sell the IPO. The other one, Stellus Capital, had a distribution, if you analyze the first quarter payment or the pro rata first part payment, of 9.1%, and this one comes at 9.47%. So, and this was backed by HIG Capital, which has $10 billion in small cap debt and equity. But they have a little bit higher cash return on their investments than Stellus Capital, but their operating costs are higher. They're about 9% versus 7.3%. So there's pluses and minuses. I think on the IPO it'll go up. One thing that's not great about it is that the average term remaining on their debt is 2.8 years, which is not very long. So that means in less than 3 years they have to go through refinancing their entire portfolio.
They're also charging quite a lot of money to do this asset management as well. Their fees are pretty high.
Right, their fees are higher than Stellar. Their base management fee is 2%, and they're allowed to borrow, so they leverage at least 2 to 1. So they get a good base figure there. The other thing that I don't particularly like is that their hurdle rate is 7% versus 8% for Stellus, and what that is the proceeds go to the stockholders up until the hurdle rate, and then beyond the hurdle rate, in this case, it's 1.75%. The manager gets 100%, and then above that, the manager takes 20%. So I did some back of the envelope calculations, and so for the to continue to pay out at the 9.47% rate, they have to pay out something on the order of 11%, which is pretty high for a junk bond portfolio.
Okay, well, we're going to give props to WhiteHorse for going public in December when most companies have decided to wait till 2013. But just be warned that these asset managers are charging a high fee in order for you to get that high dividend.